Vice President Equity Research at ICICI Security, joining in with us. Probal, very good afternoon and thank you so much for joining in with us on ET Now. Suddenly, oil and gas has become really the hot term or the hot sector that you could say. A lot that's happening there. Uh, you know, First, let's talk about the Prime Minister's visit to Russia, right? One, how does that benefit overall the energy sector? And does this assure or reassure that we could be seeing a cheaper crude actually going forward supplied to India? And how much currently in India would be importing from Russia? If you could give us those details.
Okay, I think that's a lot of questions way outside my realm of expertise in some ways. I wouldn't want to comment on the geopolitical impact of what would have probably happened with when Prime Minister Modi visited Russia. But two elements that you asked. One, if you see last year, FY24, on an average, the extent of Russian crude that was sourced by the refiners in India was as much as 25 to 30% of their requirement at a discount ranging from $8 in the beginning of the year to somewhere around $4 to $5. These are not official numbers because nobody really discloses, but based on the kind of margin performance we saw, that is how, that's our best judgment in terms of what they would have paid for it. So anything in that, to that extent, if you just do a math, if you get a $5 discount on about 25% of your requirements, that itself is a significant, about $1 plus kind of a saving in terms of your gross margin. So anything approaching that, if it can be assured with this visit, if the modalities can be worked out to ensure that that extent of crude, procurement continues, I think that is a huge positive from a downstream margin perspective. More importantly, I think what was also discussed was opening a route for LNG supplies as well to the country on the same lines as, what crude has been doing. I think that could be an even more positive development. While the LNG market probably looks like it's going to be well supplied for the next 3 to 4 years, but if you can get a reasonable quantity assured at probably some sort of an advantageous price compared to benchmark JKM prices, I think that is also something that can be a big benefit from a gas cost perspective for the gas consumers. So, any engagement that continues on a national level with Russia, given how important an energy producer it is something that's going to benefit Indian oil and gas companies. And that's what some of the market seems to be factoring in, that optimism going forward for the next 12 to 18 months.
All right. Hi, sir. Somit also joining into the conversation. Now, if you see, for the past many years, ONGC had tried to increase their production, but they have failed in that. Now it's seeking foreign partnerships. The initial well testings are also indicating that the production numbers could be higher for ONGC going forward. How do you see things changing for India's largest oil and gas explorer going forward?
I think the startup of the KG Basin assets itself probably was a big trigger in terms of reversing what has happened in ONGC's production for the last 7 to 8 years. If you really look at just the KG Basin asset performing in line with the guidance that has been given by the management for the next 2 to 3 years, that itself probably provides, 3 to 4% or even higher than that production growth on a group level for ONGC. Coming to a question about foreign collaborations and positive discoveries, I really think that, it's probably very early days to try and gauge the impact of any foreign collaborations or expertise being brought in for some of the newer Mahanadi exploration efforts, for example, which is being touted as the next big asset that ONGC has in its portfolio. We would probably like to be cautious and wait for the well results, any reservoir details as well as reserve estimates to come through before, sort of really speculating as to the prospects. But the one thing that is very clear is that production growth trajectory will probably look very different for the next 3-4 years for ONGC as well as for Oil India. That is very clear. And with realizations of oil fixed at somewhere around 75, 76, gas realizations at $6.5 to $7, I think the prospects for both these companies look markedly different than they have, let's say, over FY19 to 24. And I think that is what is driving the positivity in both the names.
City gas distribution companies of late have been among the market favorites. Now, with lowering of excise duty, do you actually think that this will re-rate this sector? And lowering of excise will actually also benefit GAIL, right? Because that will lead to higher consumption. So how does things change in the gas space, specifically for the city gas distribution companies and GAIL, with lowering of excise duty?
We sort of, our calculations suggest that, up to a 5% lowering of excise allows CNG prices to be reduced at anywhere between 2.8 to around 3.2 rupees, which in itself actually is a major positive because it increases the price competitiveness against petrol and diesel. Excise reduction has two impacts. One is the immediate impact where the price competitiveness goes up. And the second is obviously, that should have a spillover impact on the demand prospects for natural gas going forward. So very difficult to put a number on how much demand can improve, how much, because this doesn't really have a margin implication per se. Our sense is whatever tax reduction happens will have to be passed through immediately. But that just opens up the gap between petrol and diesel for CNG, which is already at a healthy 35 to 38%, depending on which city you're looking at. And I think it will also put pressure on the respective states to lower their VAT levels as well. Whoever does still have a VAT, component on the CNG, I think that could also probably be reduced down the line. That's not really relevant for Delhi, but for some of the other states, I think that will come into play. So very, very important positive, absolutely. But again, we'll have to wait for, what happens in the budget before really drawing any conclusions as such.
Sticking with this budget topic and the excise duty, do you also see that the government has a case to reduce the excise duty on petrol and diesel given the fact that the consumption has been continuously rising despite the higher prices? And if they go ahead and reduce the excise duty, just say by 1 or 2 rupees, this will benefit the larger set of consumers and even keep inflation under control?
I think obviously any price reduction is a positive from a consumption standpoint. Let me just put it this way. Whether the government has the fiscal leeway to actually reduce the excise and, take the hit on their budget is something that, frankly, is something for the finance ministry to consider. But yes, I mean, any reduction of 1 to 2 rupees would definitely be positive from an affordability perspective and from a demand perspective. But as you rightly said, even with the prices being what they are, with a small 2 rupee reduction coming through in the last probably 1.5 years, we have seen that, fuel consumption has continued to grow at a fairly steady pace. So it's a question of which fuel, the government wants to promote, what is its priority in terms of energy mix, and what sort of requirement does it look at in the economy, specifically for diesel, which also has a important industrial consumption role other than just transportation. So all of those probably will factor into, what kind of pricing and tax regime they want to maintain in these two fuels. So I wouldn't want to speculate, frankly, on what's going to happen. If it happens, it's going to be a positive. I think that's the best way I can put it.
And lastly, before we let you go, given the fact that earnings are just starting, Reliance numbers are on Friday, and you recently also came out with this preview note for Q1. How are you expecting the oil and gas earnings to be, and how are you expecting Reliance earnings to be on Friday?
See, overall earnings are going to be a bit muted. You have to remember that Q4 was a very strong quarter across the board for a lot of the companies. So from that perspective, I think margins are likely to be tempered a bit across the space, whether it's, Reliance or even the gas companies. As far as Reliance is concerned, the very sharp fall that one has seen in the refining space is likely to depress the OTC segment earnings, which is what is a drag probably across segments for this quarter. Other than that, I think retail and Jio continue to do steady business, and Q2 is obviously likely to see a big jump as far as Jio is concerned, with the kind of ARPU improvements that have now come in, as indicated by the announcements that have happened. So, but Q1, I think low to mid single digit decline on a sequential basis, both for EBITDA as well as profit for Reliance. And, even for OMCs, of course, the margin environment has changed completely, both in the marketing as well as in the refining space. So there also, I think sequentially, there is likely to be a sharp decline.
Well, that would be all, sir. Thank you for joining us and giving us your views. Well, that was Probal Sen from ICICI Securities giving his views on the oil and gas space.
If you like this video, then like, share and subscribe to ET Now.